Now, in other news, South Africa has halved its trade deficit for the first 9 months of this year after revising the data to include exports and imports from its customs union with Botswana, Lesotho, Namibia and Swaziland. Peter Montalto, emerging markets economist at Nomura International, joins us now from London for a little bit more. Peter, you mentioned in some commentary that you were released yesterday, shortly after the announcement was made, that you were not aware of the exclusion of countries like Namibia and Botswana, and you have your hands up in the air.
Well, exactly. It comes as a bit of a surprise. I mean, it turns out the SARS does include those countries and uses the SACU customs payments to attempt to reconstruct the data. But I think it was a very poorly communicated announcement. I mean, if Stats SA had been doing this, there would have been working papers, there would have been discussions, conference calls before the actual change was actually made, whereas SARS just appeared to have dumped the announcement on us yesterday evening.
You mentioned that you're surprised by the numbers and also poor communication. What impact will this have on the way international investors and maybe ratings agencies view South Africa?
Well, the impact on the current account and on GDP should actually be very small, assuming the SARB has actually made the correct estimate for the trade that is done with these countries in the past. So actually it probably won't really impact the sort of inclusion in vulnerable countries, the sort of analysis that we do around how countries will react when we go through the Fed taper exercise, say in March or April next year. But the real question from this is why it has actually occurred. And for me, there isn't enough evidence to support some of the conspiracy theories, but a lot of clients have actually been asking me, is this political? Has the Treasury done this to do window dressing around South Africa's vulnerabilities? And I say there isn't enough evidence to support that, but that's certainly what investors are asking.
But you also were worried about the timing. You mentioned in your commentary that when government is very annoyed at its inclusion at a stressed country and a taper target. Elaborate on that.
Well, we had a lot of pushback from various countries, in Washington in particular, around these sort of metrics that investment banks like to put out, looking at external balance vulnerability, things like that. And clearly, if you're having a smaller trade deficit, it makes you look slightly better optically, hence the rally we saw in the Rand last night. But I think this is all about headline numbers. It doesn't really affect the fact, even if we assumed we sort of pass all these numbers through into the current account, we assume the SARB didn't make a good estimate, you would still only be talking about a 1 percentage point smaller current account deficit, still a very large current account deficit for South Africa. The funding makeup of the current account would still be very worrying. So I don't really think it meaningfully changes any of those metrics, even if the government has tried to shift some of the view on this.
Peter, you also make mention of the fact that it's difficult to reconcile the numbers that are published by the South African Revenue Service as well as the South African Reserve Bank. What's the key difference there?
Well, the trouble is the SARB make a lot of other adjustments around the trade data based on if stuff is actually imported, if it's in transit, how gold is treated, various timing issues as well. So that's why we're waiting for the SARB really to come out with what the actual shift in their numbers will be. We have to wait until the 3rd of December for the quarterly bulletin at that time, really to see the full impact of what goes on. So we're still a little bit in the dark as into actually how to reconcile these numbers. There was no technical details really released with the report yesterday.
On that, Peter, is this unique to South Africa? Has it not taken place anywhere else in the world?
Well, normally most countries are able to look at their trade with their neighbours and include that already. Hence, I think the assumption of the market and of analysts that actually this data had always been included. But I think in general it's not a problem in most other countries. It's the fact that South Africa has such a porous border that SARS has not historically been able to track these trade flows with much accuracy.